Hi, this is Randy Finney with the right side of the chart, and this is a mid-session update for Thursday, October 9th, 2025. It is 1:27 p.m. Eastern Time as I'm starting the video number 2 of the day. I told you in the last one I wanted to do an update on the metals and miners. All this stuff kind of ties together, and ultimately, where I think things will play out is that unwinding of the credit bubble. I've focused on a lot of things. It was back in August I started highlighting this one, BIZD, and I just want to do another update saying that I think there's a good chance this is what could break things and start the next big down in the markets. And it's in meltdown mode now. I think it's safe to say we're coming up on that fourth target. Again, that was a level I said would start to trigger the breakdown. That was the support level, and I still think if we go much below T4, then I think, like I said, it was a couple weeks ago, market might be in crash mode. So all I'm trying to say is maybe not. Sometimes, like I said, you get these little rolling corrections, rolling bear markets in different sectors. But this isn't, packaged foods or something. This is a sector that's the crux of the financial market, where I think the most of the hidden problems lurk. And, Warren Buffett said it best, once the tide goes out, you see who's swimming naked. So we'll see. And again, these things can unwind fast. That's why I do these videos. Just be prepared. I've seen markets go from where it looked like they're never, ever going to, bear market or correction would never end, to explosive nonstop gains. And I've seen it the other way, where a bulletproof rally that looked like it would just go on forever. And especially when you get that, again, it's feel, experience, just I've been watching the analysts just come out with these insane, lifting their targets on the indexes, the S&P and the Dow. Again, market kind of dismissing some red flags. So I'll get to silver in a second, and gold and the miners. I just want to update this, and it's partner in crime, or closer related sector, which is private equity, and that one I've covered in the past too. PSP is your private equity ETF, and in that you can go through and look at the individual components. I'm just going to show you some of those here. And like I said, they're closely related to private credit, and in the same kind of premise, the whole private, hush hush, and we don't have to disclose as much, and we get to mark our assets, which in private equity, it's equity ownership of a company. They get a value at what they think it's worth, not what the market does, because the market's not pricing it, it's not trading it. And same thing with these loans and private credit. So here's one. Again, these are components of PSP, GHC, Graham Holdings, and we haven't seen selling like this. We did have a period there. Sometimes you get these, except this one's more technically induced. If you look at the charts, you look at the way I have it, I'm going to extend that divergence over there. We did put in at this most recent high, a divergent high, and again, I can make back here, I couldn't make a strong technical case to short it. I couldn't make one really at all, to be honest with you. And it had a similar correction. And that correction took it back to the 200s, where they bought it. So we're probably headed down to the 200s here at minimum, and this primary uptrend line before all is said and done. Although that's going to do some damage to this stock in this sector. That would be, from the recent highs, a drop of almost 20%. And again, I'm not going to go over each and every one. I'll get to gold and silver. I just want to show you, what I'm watching. And I'm watching the problems in private credit now spilling over to private equity. And again, some of these companies overlap. It's just like GDX. I often tell you that, a lot of the gold, quote unquote, gold miners also are pulling silver out of the ground, if depending on their location in the mines and all that. So, the price of one can affect the other. And these guys too. Again, some of these companies are both private equity and private credit. That's it. So just I want to show you the recent, the acceleration, and again, maybe I'm crying wolf here, Chicken Little, the sky is falling. Maybe they'll come in and buy it. These are, like I said, we're coming up to sports, but I've been doing this for a week or so where we keep coming up to these support levels and they just get shattered and taken out. And that's what happens when there's an unwind. And again, it's one of the most powerful and awe-inspiring. They're just so profitable to trade if you can get in on these. So just continue to watch and watch the levels. I'm going to get to the equity markets in a second. You want to see you can get those sell signals on the NASDAQ 100 as well. ARC. Again, I'm going through the components of PSP, the private equity ETF. And again, some of this is overlap here, but you can see what's happening there in the sector. And again, sooner or later, the media is going to pick this up. And it can snowball in itself. It may be nothing. Sometimes in a sector, they shoot first and ask questions later. That may be what's going on here. And then when everyone digs under, when the big investment firms look under the hood. Oh, maybe they're okay. Maybe that recent bankruptcy that took down, what was it? One of the ones I shared with you, GECC. Maybe that was a one-off. But again, I'm seeing a trend developing, and now we're seeing pressure on junk bonds, like I said today. So it's starting to spill over into the public debt markets as well. So. All right, let's stop there. And look at that one. Now, again, I'm just clicking the list of the components here and just kind of showing you what's going on. All right, so that's it. Let's go to QQQ. We are still right on the trend line. This is a 60-minute chart. This is the trend line that needs to go. I'm almost certain I have an alert. I'm going to set it just in case. All right, I went over the equity markets before quite a bit. And now we're going to talk gold, silver, and GDX. So as I said, the dollar continues to rally up. We're at that T1 big level. And if and when taken out, and you're also at the 200-day simple moving average, that blue line you can see right here. We had taken back the 200s. Dollar was in rally mode. Hit them, correct. They bounced it a few times. They bought it. But once it was clearly taken out, that red candle right there, you can see a clear breakdown. That was it. Put a knife through the dollar, and the dollar went down. So now it's taking out the 200 simple. So my T1 level now happens to come in perfectly with the 200 simple moving average, and that again is most likely going to. We're starting to see it today. Like I said, point of recognition. Traders were ignoring and dismissive of the rally in the dollar here, and gold and silver, but they're starting to take note today. Now let's go into those. Gold being the mothership. That's the most important one, still above that trend line I gave you, but putting in a pretty nasty candle today, down 2.25%. That's the biggest red candle in gold. The way to do it, a quick way I'll measure, if you just for kicks and giggles want to see, how many times we've dropped that much, just put a trend line that measures the size of the candle. And this one shows we were at the highs today and, all-time high or right off yesterday's all-time high. And then you just kind of go and size it, and you'll see we haven't had a red candle like that since a single red candle in a long time. So that may have some implications. But again, there's a trend line. Dip buyers are like Pavlov's dogs. The longer you condition them by ringing the bell and then feeding them, you do it enough times, it really ingrains that behavior. And so, dip buyers will step in and buy dips, and they're going to buy dips, some of them at tactical levels like this trend line. And then if and when that trend line goes, and the other thing you want to look for too is this a bearish PPO crossover. And you can put up your histogram if you can't see the lines well. And you get these, what I call big green hills, that denotes a strong uptrend. And that's when it started right there. And so if you get the trend line break and the PPO crossover, the bearish PPO crossover, that's a pretty good sign you're going to get at least a correction, a tradable correction, and quite often a trend reversal. This one set a multi-month correction in gold on a sideways trading range. All right, let's put that away and let's talk to where, not if, but when we get the next real correction or top. If possible, there'll be a top at some point in gold, and this may be it today, or it could be a year from now. Where to make the most money? I often say it's very simple. You're going to make more money going long silver and or the mining stocks during a bull run in gold because they move up in a multiple gold. Same thing holds true in reverse. So basically, if you get the call right on gold, you can put the same amount of money in and get paid more on at almost all points in time on going long or short GDX than you can going long or short gold. Now, gold futures have their benefit, liquidity, tax benefits, all that other stuff. So if you're a futures trader, I'll continue to update gold. And again, GDX and silver are only going to go so far in any one direction without gold confirming that move. And there are times, well, and I've pointed those out over the years, where gold's been on a strong, good rally and silver has been underperforming or going down. And I love those trades. We close the gap. Those are mean reversion trades. But right now, they both are in rally mode. And if you look at the long-term charts, let's just do that for you. Turn off all the lines. This is gold, last bull market there. It peaked with a blow-off top back in 2011, gave us a bear market. And then we started a new bull market, and this is accelerating like many do. Exactly what happened here. Again, I've highlighted this. This is what a blow off top looks like. You're in a pretty good uptrend, a nice clean, nope, that's not what I want. I want a trend line. You have a nice clean, well-defined uptrend, but then all of a sudden, instead of going, following the linear slope, you go parabolic, which means the slope increases. It's a parabola, an increasing slope, and you're going near vertical at the end, and that is a signature of a blow-off top. So that certainly fits the bill. Volume, sentiment, everything else. I just want to throw that out there because I know, again, the vast majority of pundits are bullish on gold and silver now. So there's a lot of the conditions are ripe. And let's follow the charts, because the one thing I can tell you from experience, you do not want to be fighting in short a blow-off top or underestimate how far it can go. Take it from someone that's lived through the dot-com bubble. Luckily, that was just before my days of where I fell in love with, flexible trading and short selling and all that stuff. I was alongside only trader, so it was a beautiful run but I could, studying the charts and looking at it, there would probably 1,001 times that, short sellers would have got in there, and that probably added to the fuel, especially institutions, because they couldn't grasp that. They knew the fundamentals weren't there, and they knew it was a bubble, but those bubbles can go, and they do go until they finally just stop going up. But, what you want to look for are the signs and the traits. And again, this move up here, I'm not going to use the word as unsustainable, but with every tick higher, the odds of a sudden reversal come. And what I've often said many times over is parabolic advances do not end well. I've never seen a parabolic advance end well. When it does end, the ensuing move is usually just as powerful in the opposite direction. And the same folks, you can just look at charts and see what has had positive correlations and been going up lately. And we know that Bitcoin and the stock market and mainly AI stocks, like I showed you in the stock market, a lot of things are in bear markets, a lot of sectors and a lot of individual stocks. So AI is not the only thing in a bull market, but it's clearly done the heaviest lifting. But the correlation there, especially to tech stocks, semis, anything to do with AI, and Bitcoin and gold and silver all there. So it stands, you could use deductive reasoning to say that a lot of these folks buying that are chasing the gold and silver trade, especially buying in at this point, keeping it going, are most likely buying on leverage, and probably are the same folks that have the Bitcoin and the NVIDIA and all that stuff. And so therefore, not really if, but when things unwind. You can look at, and I've showed you the chart. I don't have it queued up for FINRA margin interest. Every bull market top, every major correction, you have a surge and you have record high, and that goes parabolic to the margin interest, which is folks, both retail investors and institutional investors borrowing and leveraging up their trades because they're doing so well. So hey, I'm making X% a year on NVIDIA and in crypto. Why not borrow against those holdings and juice my returns? And that's and then that whole thing goes the other way once the tide clearly turns, And then it is a vicious cycle. Selling then begets more selling. So again, I know I've said this, and I know it may be falling on deaf ears at this point. Let's look at the charts. There's the uptrend line in gold that needs to break. You want to play it safe, wait for a solid weekly close to either short or get out of your gold longs. But either way, that I just wanted to update. That's what it looks like on the daily chart. 60-minute chart. Here's the uptrend line that should do the trick to open the door to more selling. Right there, your primary uptrend line on the 60-minute chart comes off the late August lows right there. Big negative divergence. And it already took out this minor trend line. I believe I gave this to you the other day. So that was your first sell signal. Second sell signal and objective short entry will come on a break of the trend line. And you also have some pretty good support right here as well. So call that the next level, 358. All right, silver. 60-minute chart. Silver broke. I'm going to tweak this trend line now. This is what I always do. I always say the charts are dynamic, and therefore so is my analysis, meaning they're constantly changing. So that's now the best fit, most reactions, clean off this recent low here, and just move the chains because they got a first down there, went to a marginal new high, reset it, but it kept the divergence intact, just broke down there. And again, you really want to get the party started on a sell-off, you're going to need to see gold break down as well. Like I said, this uptrend line right here that comes off the lows from April, that's a nice potential target right there. If hit, just and depending on when hit, if and when, be about 13% drop. Daily chart on silver, massive bearish engulfing candle. Let me go back to, let me draw up a trend line there. I don't even have a good one because it's going, it's also going parabolic, meaning you have an increasing slope. You had a trend line, let's try this. You had a trend line here, then you started steepening and getting even more steep. And now a massive bearish engulfing candle on the SLV daily chart. Here's what it looks like on the weekly. Monthly actually shows it best. This is SLV. This ETF started trading back in, it looks like late 05, early 06. And we had a run in this. If nothing else, guys, if you're new to this, this shows you, if you think for a second that you can short something because it's extremely overbought and because everybody's bullish and everybody's long, and that alone is a reason, well, take a look at this chart. It'll show you that this run here was a 472% run off the lows. This one, you had a correction in between, so kind of reset. See, this never had a reset. You went straight up there, 472% with very little, if any, corrective action. Here, you already had a nice correction to wash out bullish sentiment and all that. Extreme. Either way, you can play it off that low, and I could tell you you're only 323%, or play it off that low and tell you you're only 186%. We're also, I'm going to say it, speak the bullish case here. We have, we're coming off and we're still, inflation has abated, but what we saw in the last few years was the highest rate of inflation, like nothing seen in nearly 50 years. It's going back to that inflation of the late 60s and early 70s, right? You can make a case that gold and silver can go a lot more. So that's it. Hard stop, full disclaimer. But with that being said, just because it went up that much then doesn't mean it's going to do it again. All we can do is go off the charts. So when I get to the charts, like I just said, that is a sell signal. Yes, gold hasn't broke down, but that is a bearish engulfing candle. One of my favorite trades because the RR is just so damn good. And I will acknowledge that on tech stocks, a lot of things, well, we've had a lot. We've had more hits and misses, but there's been some misses in the last year or so on various key stocks and sectors with bearish engulfing candles. Corrections followed in most cases, even bear markets, bear trends, like we got the bear market, the drop in 2022, that bear trend, bear market. But what I was saying is every time I see these, the strategy is simple. If you get a bearish engulfing, unless we're going to close the day and we rally and we get back here, you have to, it's very simple. The fat part has to engulf at least the body of the previous candle. And as I like to say, the redder the better, meaning if we can go down and close here today at the lows, we're off the lows now, you're going to engulf 1, 2, 3, 4, the 5. It's just the body you have to engulf for the previous candles, potentially 6 candles there, right? That's powerful stuff. You're wiping out the traders, all traders that bought and jumped in late in the last 6 days. And so immediately they're underwater, and then gradually but steadily they start selling. Now the day is young. We've seen plenty of stick saves. Look, and here's my daily chart. We're right on, let me put it right here. That's where it should be. We're about right on the trend line now. So if you look at the trend line, it's there. However, if you want to short, if you want to take a starter, which is probably all you'd want to do at this point because gold hasn't broken down, the strategy I was saying is very simple. When you get close to the end of the day, if it looks like you're almost certain to get this bearish engulfing, in other words, the bottom part, the close of the day, has to be below the body of this candle. And then you have a bearish engulfing. So you enter a short position. Your stop loss is going to be just above the top of that candle because by nature they're topping sticks, meaning you can't have another candle higher, that's the top. So you can put it a little bit above if you want, give it a little room. Sometimes they'll do that, punch it out. But so the point I'm making is your stop is relatively small. Let's just say you shorted it right now, 43.55. That's going to give you a stop loss of about 6%, call it 7, right? If you go a little higher. What's your potential? Well, if this is a top, if it turns out to be what a bearish engulfing is, a topping stick that marks the end of the run in silver, the downside's huge. I'm going to go back to this monthly chart and just say, let's just say we pull back to this primary trend line off the lows. That right there is going to be a drop of about 33%. Of course, if it's the end of a run, just like this one here, well, silver at that point fell 77%. So, and again, I'll leave it up to you whether you want to take any or all. I'm going to go to GDX now, talk on the miners. Spend a little time there. That is a breakdown. I don't have to squint to see. There's a breakdown in the miners. Remember, at the end of the day, and I often say this, most of the time the miners are going to follow gold. It's what I call it's big brother gold in the same direction, but just in a multiple thereof. In other words, GDX is down 5.27% today, where gold's only down whatever it was, couple percent. That's normal. But there are times where I've seen gold go up, particularly in times of severe market distress, powerful sell-offs, and the miners drop too, because remember, at the end of the day, gold mining stocks are just that. They are stocks. They are not physical gold. And so if gold, usually they will follow because that's, the profit margins are going up. They're going into the ground. It costs them the same amount to pull out gold, whether, their costs to pull out of the ground, if, energy and labor is all the same. It doesn't cost them any more to grab an ounce of gold, at $1,000 versus, whatever, 4,000. The profits go up, pure profits when gold goes up, and that's why the miners have been ripping. However, of course, that goes the other way, and you also get, just like oil, think of high oil prices. You guys probably watch Landman, great series, and and they'll talk about when oil prices are high, they're turning on all these other wells that aren't normally as productive, and you get a ton more supply. The drillers want to cash in. Same thing with GDX, these miners. So you can bet your bottom dollar that a lot of the idle mines have been fired up recently and are on full throttle, and they're pumping out a lot of gold right now at this price, and silver. That I can guarantee you. And then what happens is, it's just like in the semiconductor sector when you have this rip-roaring bull market, and it looks like it's never going to stop. And one day you just, in the nature of that sector, 70% crashes once the trend changes, and you get a bear market. Why? Because then there's a glut of chips on the market. They've maxed out production, pumped out chips, and all of a sudden demand drops off, and now you have this glut of supply on the market. And the same thing will happen to the metals and the miners. That is. All right, so again, it's a sell signal. It's a breakdown of that trend line. Bearish PPO crossover coming off, also a divergent high, I should add here. You have flat to lower lows on the indicators with higher high in prices. And that's it. So take it or leave it. Price targets, I think I already gave you some here. There's that divergent high. You have, these are your support level / targets that I gave you recently. 72.11 with this uptrend line probably coming in first. And then if that's taken out, my next target's down there about 67.32. And again, if you look at the long-term charts, you have right now all the makings. Today is only Thursday. Friday is all that counts on a weekly chart, but this is a bearish engulfing candle on the weekly chart of GDX. There was a last bearish engulfing candle. From the high of that candle to the low, the miners dropped 15%. It didn't turn out to be at the end of the run, but it was a healthy correction at minimum. So that's it. There was a bearish engulfing candle right there that was followed by a drop of 48%. So, you don't get many, and you want to look for them after an extended uptrend. So, all right, that's that. You have targets, and then let's just do this the rest of the video. I'm still good on time. Let's rifle through the sector. As I often say, a index or a sector is simply a sum of its parts. With the S&P 500 and NASDAQ 100, it's technically a weighted sum of its parts because you have the weighted components. But for simplicity, we look at the components. In the gold miners, more so than just about any other sector I follow, birds of a feather flock together. They're all doing the same damn thing. They're all digging in the ground and trying to pull out gold and silver. And so unlike biotechs, where some are working on, some have, a drug, 10 drugs in the pipeline, 5 are very promising, a few of them are in the final stages, and then you have another biotech that's working on something else and maybe 1 drug in the pipeline and it just got nixed. So there's a lot of variance in that kind of sector where you can see some stocks that are ripping and others that are crashing. Gold mining stocks are high correlation, again, because it's a simple business model. So, but I like to look, especially in a rip-roaring rally, you want to make sure you have sell signals, at least on some of the bigger ones. And that's what we're doing here, as I often do when I queue in an ETF like I did on GDX. It'll load up my holdings, and I sort them by market cap, with Newmont being the big dog here. Top one at 96.8 billion right now. And that is a sell signal, my friends. Now, at the end of the day, maybe it rallies back up and we get a 6 save and it keeps the whole thing going. Maybe it proves to be a whipsaw, meaning we close down red today below there, but then regain it soon. There's enough maybes. If you want to, at the end of the day, take a sell signal or don't take it. That's up to you. But this is a sell signal if you've been looking to either get out, take profits on your mining longs, or get in for a short trade. This is that's a nice clean breakdown. Look how well defined this trend line is. That trend line, if you want to replicate it, make sure to use log scaling on your chart, not linear. The arithmetic scaling, which is also linear, is going to give you a different, especially on mining stocks that have been moving, a different perspective. But so I came off just under the bottom of that candle. It has a long shadow on July 15th. So there it is. Divergent high breakdown in the largest mining stock, which helps to support a case, or at least a starter short on GDX. 82 is your first support level / target. My second target would be right here, about 77.25, and then my current final target, well, that's going to come in roughly together. There's a downtrend line. My guess is they'll be selling off pretty hard that day. We hit that, we'll probably go through 77.26 and then come back and park it on that level at the end of the day. Just be my guess. AEM, you don't have to squint to see it. When I say if you have to squint to see if a stock has triggered a sell signal or breakdown, give it the benefit of the doubt. I don't have to squint to see it. This would take a hell of a stick save now to get back on or above that trend line. That's AEM, the second largest miner. WPM, right on trend line support. However, it just broke the minor trend line here. So you see this one broke down a couple days ago, back tested, and then boom, big down today. Testing trend line support So if you want to give it the benefit, and the 50-day moving average. See that yellow line in there? I'll make it nice and bright for you. Some stocks like different moving averages better than others. This stock, they really like the 50. You come in, they buy pullbacks to the 50, right? And so if you've been waiting to get into Wheaton, WPM, here's your thing. You've got uptrend line support. You have 50-day moving average support. And I could even say you have price support there. There's several reactions and a reaction high. That's actually good price support. Triple resistance, triple support. However, if it breaks that support, which looking at this chart, if you're coming in to buy now, the longer and longer these rallies go on, the less objective, the more likely you're going to be buying in at the top, and you're going to get smoked if that level breaks. Now, you can buy it. Just have your stop somewhat below it. Or you wait till that level goes and short it. Or you don't do anything. You don't touch Wheaton. You just keep it simple and use GDX, because now you're diversified among a couple dozen names, and you don't have to worry about picking the wrong one or two mining stocks. And again, because they're so correlated, GDX has plenty of juice in it. Yes, there's Dust and Nugget. Dust is a 2-time short, I believe. Nugget's a 2-time long. If that's your poison, that's it. Just remember that they work best in a mostly unidirectional trend when we go straight down or straight up, with very few give back days. FNV, Frank, okay, you can see all these levels. Clear breakdown. So the miners, GDX, despite gold having taken out the trend line yet, we have some pretty powerful sell signals. And now a lot of them are coming up with support where Pavlov's dogs will probably step in and buy, especially if gold can hold that trend line. But again, if not, sometimes you don't. Sometimes you go right through those levels. And that's very bearish. What it shows you is there's this the sellers have dried up. Because think about a bull trend. What makes it stop besides fundamentals? When the last bull has bought his or her share, nobody's left to buy. And so then what happens is, when you're all in after one of these bubble type scenarios, and that's one reason these parabolic runs and strong runs have such powerful corrections and bear markets to follow, there's no one left. The shorts have long been blown out. And if you don't have a lot of longs left on the sidelines with cash to deploy into the metals because everyone's all in, that's when they just fall and they just crash right through support level after support level, kind of like what the business development companies have been doing. Barrick just starting to crack the uptrend line. KGC, clear breakdown. You don't have to squint to see it. And that's a nice clean trend line too, right? PAS, Pan American Silver, breaking down today. AGI broke down 2 days ago, back tested yesterday, rejection today. First target 3088. Our GLD Royal Gold, yeah, I'm going to say that's a breakdown. CDE had a little whipsaw recently, but back down below the trend line now. OR, clear breakdown. HL, getting close, very close. IAG, clear breakdown. BTG, the minor trend line, there's a more significant trend line right here. If that goes, you're going to open the door to more selling. AG, First Majestic, not yet about one of the better looking ones. Down big today, but it's no technical damage at all, and doesn't have a bearish engulfing candle. It's above even the minor trend line. But again, that's an outlier. Like I said, this is why I do this. If collectively I go through this and there's 29 holdings in GDX, and if I go through these charts and of the 29, I've got 20 of them on a sell signal, that's pretty good right there. That's good enough. But if I go through and the majority of them are at, even if they've already broken down, like that's just a minor trend line, but if they're at support, that's where you're probably going to get buyers step in, or you just hold off and wait till the remainder of these guys take out support. And GD, I didn't have a trend line. You can see I haven't marked all these up. It's been a while, but that's probably the best fit. Broke down, has been back testing, diverging, nice divergent high. EQX, nice divergence right there, negative divergence. Oops. SSRM, again, I don't have them all marked up. been a while since I've gone through these guys. They've just been doing their thing lately, and haven't had a reason to really do a deep dive into these charts. But now we're doing it. AU, there's your uptrend line right there, right on the trend line right now. Got your divergence. Again, these birds of a feather. So the charts are going to look very similar. SAND. Breakdown. BVN. It's a foreign miner, obviously. Well, it's quite a few of these are. And that one on BVN, what I see, just so you know, is that would probably be the best uptrend line right there. And breakdown, backtest followed by rejection, and a fat old bearish engulfing. So quite a few bearish engulfings today on this daily chart. And again, you're probably going to see, if we get more downside this week, you're probably going to get quite a few on the weekly chart. And there's your weekly uptrend line. So again, if you're longer term bullish, but you also are a flexible trader like I am, and you just want to trade a correction, but then get back in, then I'll update these guys. If I'll do additional videos depending on what goes forward. What happens going forward. I'll do some more updates and I'll share my thoughts. But if things get ugly and we take out that trend line, then here, let me move this line. Then this one probably fall back, test that previous high at about 1884. And then ultimately it could correct all the way back down here. And guess what? You ain't going to like it if you're a gold bug and you're long the metals, because that's going to be a drop of about 41%. But guess what, guys? And again, I'm longer term. I'm inflation. I think we're going to see higher rates in the next decade and the higher inflation. And that's bullish for gold and the mining stocks and commodities and things like that. But unless it's a severe, certain commodities, industrial commodities might not do well if the economy's in a deep recession or depression. But what I wanted to say here is this is an uptrend, and so I don't think that 40-something% drop's too bearish a call. It would just take us back to the primary bull market uptrend line. It'd be a great buying op if it confirmed with other, miners and GDX and gold and everything else confirmed that it was an objective buy time when we get there. So let me stop here. There's a few more, but you're going to see, almost the same thing. You see as I go through these, the ones I don't have marked up, some are above trend and some aren't. That one must have got bought out. So when you see these little lines like that, that's typically a buyout or they went private or something. Bearish engulfing candle on EXK. There's your uptrend line right there. This is GFI. We're almost done. I figure I was going to stop, but remember, there's only, 29 in there, and I'm on number 28 right now. That one, yeah, I'd say that's a clear breakdown. You don't have to squint to see it. And, of course, it follows like so many divergent high and bubble-like conditions. SILV, gone. HMY, Harmony, big bearish engulfing candle on Harmony, and a big bearish engulfing candle on the last one. This is DRD. There's your uptrend line. Goes about right there. So quite a few of them broke down the other day. That's why the miners have been wobbling lately, despite what gold and silver were doing. And now today is just bearish engulfings across the boards. Majority, a lot of them have broken trend. A few haven't yet. And that would, again, just be a reason to, add to a short position. Or, again, if you're a bull, set your stops below those key support levels. And, again, don't forget gold. Gold's still above trend, so this could just be a little correction buying opportunity in the miners, followed by another leg up. That's why I'll continue to monitor these charts more actively right now that we have some significant technical developments today and over the last few days. I will wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.